welcome to my YouTube channel, The Accounting Educator. I'm Safir Ahmed, a senior lecturer in accounting and finance in a UK university. I also work with ACCA as an early career ambassador. This video is relevant if you're studying cash flow as part of your study program, whether it is BSc Accounting and Finance, BA Accounting and BA Accounting, or if you are a student of ACCA and currently studying F3 Financial Accounting or F7 Financial Reporting, or if you're studying CIMA at the moment and you are studying BA3 unit, BA3 module in that, or if you are a student of MBA and as part of your accounting and finance module, you are studying cash flow statement, or it could then also be if you're a student of MSc management and as part of your finance module, you're studying cash flow statement. So in this video, I will show you how to prepare cash flow statement in a given situation, in a given data. So this is a question I have taken it from AAT level 4, drafting and interpreting financial statements, from Osborne Tutor Zone Practice Assessment 1. So at this point of the video, I will ask you to take pictures so then I don't have to keep sharing and unsharing these screens. So I can save some of your time if you can take some pictures here, and then of course look at the information, which information I'm taking, or which information I'm taking and from where I'm taking and why I'm taking. I will explain, of course. So if you have taken picture of this first page of this question, I'm just going to scroll down so you can take a couple more pictures. So this is the statement of financial positions given to us for the last 2 years. In other words, this year and the last year, which we will need in our preparation of cash flow statement. And then there is some further information as well. And there are 4 bullet points. So if you look at the question requirements here, they normally what they tend to do is that they just separate the statement of separate the operating activities from the investing and financing, but at the end that what we need to calculate here is cash and cash equivalent at the end of the year, and this should match with our amount in our statement of financial position. But I will show you that it will match with that. That's your verification point, that your question is your answer is 100% correct, basically. Okay, so let me take you to my simple Excel sheet where I will be showing you how to prepare this statement of cash flows in this situation. So first of all, what you do, you always start with the profit before tax. Now, profit before tax, remember, you will be looking at the statement of profit or loss. Okay, so in your first picture you have taken, you can see the profit before tax is 7847. Then what you will be doing, you will be adding back non-cash expenses. So one of the non-cash expenses is depreciation, of course, and finance cost. You need to add it back as well, because we don't know at this point that if the company has paid all of its interest or not. So we'll be looking into that. We'll be adding this, and then of course the interest paid a bit further down we'll be deducting. Now a lot of students say, so why are we adding same thing and deducting same thing? Because the standard wants us to show this, even though that the company has paid the entire amount of interest, they want us to show to the users of financial statement. So therefore we have to include it. Now depreciation, if you look at the third picture, where is the further information? So as part of the depreciation, you can see it's 3940. We'll be adding it back. And then the finance cost, you can look at your first picture where it's the statement of profit or loss. And that's given to us as 250. And loss on disposal of property, plant, and equipment, again, is not actual money loss. It's basically loss we have created. We looked at the book value of the asset and we looked at the sale proceeds of the asset. So this is not the cash loss in that sense. So therefore, this is a non-cash expense as well. So we will be adding it back, which is 679. Dividend received, we will be deducting from here because it's a non-operating income. So remember, non-cash income and non-operating income, we have to deduct it from here. Non-cash income, of course, in terms of money, we haven't received it anything, but non-operating income means that we need to allocate it in the correct place. So the correct place for the dividend received in this case is investing, because remember, it's investing activity. So when a company buys shares of another company, then of course they're gonna get some money on that, return on that, and that's basically your investing income. Similarly, if it was given to us interest received, we would have done the same thing. So we'll be deducting from here and we'll be adding it back under investing activity. So dividend received is the amount for that is 500. So we'll be deducting that. Now it's really important that you deduct the stuff that you need to deduct and you add the stuff that what you need to add, because otherwise you can actually mess up your answer. So it's really important to note that down. Now, after this, what we do is that we record the changes in working capital, which means increase, decrease in inventories, increase, decrease in receivables, increase, decrease in payables. So this you will be looking in your second picture, which you remember that 2 years statement of financial positions are given to us. So we can easily determine whether it has increased or decreased. So if you look at the inventories, which is under current assets, you can see that last year inventories was 9638 and this year is 10870. So which means that there was an increase in inventories. Now, if it is increase in inventories, in terms of the cash flow, it is cash outflow because the company must have paid the money to buy these inventories. So therefore, this change in inventory, which is increase in inventories, we will be actually deducting it. It will be negative amount. So as I need negative amount, I'm just writing the smaller amount first. Okay, so which you can see 9638 minus 10, 10870. There you go. Changes in trade receivable. So if you look at the trade receivable, so the last year it was 9983, this year is 9723, is 26. Now, in terms of the trade receivable, there is a decrease in trade receivables. So decrease in trade receivable meaning what? We must have received money during the year. That's why that now people owe us less money. So therefore, decrease in receivables will be a positive cash flow because company has received money. So because it's a positive, so I'll start with the bigger amount here, which is 9983 minus 9726. And then you'll be looking at the trade payables and you want to see whether it has increased or decreased. So let's have a look. If you look at the trade payables, last year it was 3932 and this year is 3474. So which means that there is a decrease in payables. Decrease in payables means that this company has paid money to its suppliers. That's why they owe less money now. So this will be negative amount as well, because remember cash outflow in that sense. Okay, so if you look at that, because I want negative amount again, I will be starting with the lower amount, so which is 3474 and minus 3932. So the sum of this will give you cash generated from operations, And if it was negative amount, then it would have been cash used in operations. Okay, now tax paid. So we'll be doing as part of working. Now, also you notice here that I'm not really using the step-by-step approach. The step-by-step approach, you only need to use it once you are really new and you are not familiar with the pro forma. So you look at the pro forma and tackling it step by step. But in this case, I will be just, calculating it as it is. So the tax paid. Now, this year tax, which will be given to you as part of your statement of profit and loss. So your first picture. So tax charge for the year. And also just to remind you, 3 zeros at the top. So tax charge for the year is given to you as part of the statement of profit and loss, which is 1061. And what you do, you make an adjustment in relation to the tax liability. So whether tax liability has increased or decreased. So if decreased, which means that in addition to this, we paid that as well. So if you look at the tax liability, you can see that last year it was 1170, this year is 1078. So which is decrease. So decrease in tax liability. Now remember, if it would have been increased, we would have deducted it from here. Yeah. Okay, so the decrease in tax liability, which is the 2 years amounts, you can see. So the first one is 1170. And minus 1078. And if you add these two together, this will give you tax paid. So please be mindful that if it was increased, you would have deducted from here. That's the only sort of adjustment you make in taxation, tax paid, in other words, here. So tax paid, we already calculated. Again, because it's payment, it will be a negative amount. Interest paid. Now, there is no information in relation to the interest paid, how much interest was paid. And if there is no information in a question, then we assume that all of the interest was paid, which is finance cost. Finance cost is another name of interest expense. Yeah. And remember, it will be in a minus as well because we are deducting it. So this will give you net cash flows from operating activities. So in other words, that half of your job is done. So we have determined the net cash flows from operating activities. Now, investing activities. Now, one thing we know that dividend received, remember we deducted from operating activities because it was an investing activity. So we will be adding it here. So which was 500. Remember, this is the one that we deducted. So we are adding or we are placing it in the correct place, which is the investing activities. Now, the other couple of items here for investing activities, we need to do the working for them. So working 2, which is we need to find out the disposal proceeds on disposal of non-current asset. So you start with the this one. You will start with the carrying amount of the asset sold. Now, remember, carrying amount is also known as net book value. So in some of your qualifications, they might use the word net book value. And if I remind you that carrying amount is cost minus accumulated depreciation. So in this case, it will be carrying amount minus accumulated depreciation of the asset sold. Okay, so if you look at the further information, so about this, it will be given to you there as part of the further information. So you can see property, plant, and equipment with the carrying amount of 848 was sold in the year. Okay. Actually, in this case, they're given you carrying amount, so we don't have to do any calculation. But sometimes they give you cost, and sometimes they give you cost and cumulative depreciation. So you are supposed to know how to calculate it. So in this case, it's easier because it's already given to us, which is 848. And what we do, we make an adjustment for profit or loss. So if it is profit for the year, profit on disposal, you will be adding it. If it will be loss, you will be deducting it. Okay. Now, in this case, we already know that it was a disposal loss on disposal. How do I know? Remember in this statement of profit or loss, and remember the same loss that we added it back here in operating activities. So this is the loss that we will be deducting from there. 679. So the difference will give you the disposal proceeds received by the company. So in other words, from company's perspective, this is from company perspective, this is cash inflow, so therefore it's positive figure. So it will be here. Now the next working, which is working 3, although they did not explain it to you explicitly that there were some assets bought, but if you look at the property, plant and equipment amounts in the 2 years, which is in your second picture you must have taken, you can see that there is a huge difference in that. So if there is a huge difference in that, then of course they must have bought some, they must have bought some assets, some property, plant and equipment during the year. So how we calculate that, I'm just going to show you here. So you start with basically opening property, plant and equipment. This is the last year one. So remember, last year closing becomes this year opening. So the last year closing, which is 27,530. And what you do from here is you deduct a couple of items. So you deduct depreciation charge, which is again given to us. And you also deduct carrying value of assets sold, or non-current assets sold, or property, plant and equipment sold. So I'm using these two words, alternatively, NCA, non-current asset, and PPE, property, plant and equipment. So in exam, I mean, either of them can be used. It's not a big deal, but you can double check your tutor, your teacher. For AAT purpose, remember they give you a drop-down menu and they will be giving you one of them anyway. So the carrying value of non-current assets sold, which we just already know, 848, we'll be deducting that. And also depreciation charge, remember, which is given to you as part of the further information, the one we have added back in our operating activities as well. So which is 3940. And what else we do here? We add back if there is any revaluation surplus. So let me see if there is any revaluation surplus happened during the year. Yes, there is. You can see that the last year was 1 million and this year is 2.5 million. So that means that there was an increase of 1.5 million. So you'll be adding that back. So whatever amount you get here, you deduct from it property, plant and equipment closing, which is at the end of this year, whatever is given to you as part of your statement of financial position for this year. So this year's statement of financial position, property, plant, and 35,162. And the difference between the two will give you purchase of property, plant, and equipment. Which is the difference between this and this. 10, 9, 20. So this will be cash outflow, because remember that when the company bought the asset, they must have paid the money. Okay, so let's record that. So this will be negative. This amount is negative. Okay, now this will give you net cash flows from investing activities, which in other words is sum of these. There we go. And then financing activities. So you need to check that whether there were any shares issued during the year or shares were redeemed during the year. So how would you know? Remember share capital and share premium. If there is a change in share capital and share premium, then the chances are that either the new shares issued, whether it is normal share issue or the right share issue, or it could be the redemption of the shares. So redemption of the shares is when a company buys back their shares, their own shares. Okay, so share capital and share premium. So the way you calculate this, you just add the share capital and share premium of this year. So the share capital and share premium of this year, so which is 15,300, and plus share premium of this year, which is 5,100, and then minus share capital and share premium of last year. So share capital of last year was this, and share premium of last year was this. And this will give you the issue of shares, the value of issue of shares. So which is 5,300 plus 5,100 and minus 13,600 and minus 4,300, which is 2,500. So it will be positive cash flow because the company has issued shares during the year and they received money from people, from customers. The other thing you need to keep an eye on is on the long-term liabilities, non-current liabilities. So you can see the bank loan. So bank loan has decreased. Now, decrease in bank loan means repayment of bank loan. So this will be cash outflow. There you go. And dividend paid. Now, this is interesting because dividend paid, either you can deduct it from financing activities or you can deduct it from operating activities. Okay, so International Accounting Standard 7 permits both of the treatment. So either way, your answer will be 100% correct. So I prefer to normally record it under financing activities because if you think about it, it is kind of, excuse me, in relation to the shares, and that's why. But it can be argued that it can be recorded under operating activities because it is being paid out of the profits. So either way, it will be correct. So which is 1.8 million. Okay, so this will give you net cash flows from financing activities. So in other words, sum of this will be your net cash flows from financing activities. Now, net cash flows during the year. So this is simply you're adding the end product of each of the activities. So you can see this minus this minus this. So which has given you net cash flows during the year, a negative amount. So in other words, that this is net cash used during the year. And then what we do, we add cash and cash equivalents opening, which is the last year cash and cash equivalent. So this one you will see in your second picture, which was statement of financial positions. So if you look at the under current assets, cash and cash equivalent, last year was 217. And this will give you the closing cash and cash equivalent. So if the company has used bank overdraft, then it will be a negative amount. And you can see it is a negative amount. So you need to check in your statement of financial position for this year, does this match with our bank overdraft figure, which is 214? And you can clearly see that means Our answer is 100% correct. Okay, so if it was positive, then you would be looking at the cash and cash equivalent in the statement of financial position. But because it's negative, so we know that the company must have used bank overdraft. Okay, thank you for listening. I will be back with other videos.